And now let's shift to moves made by the United States to remove Chinese companies from U.S. stock exchanges if they do not fully comply with auditing legislation just passed by the House of Representatives. Beijing has accused the U.S. of politicizing securities regulations. CGTN's Zheng Chunying has the story.
China said the United States was adopting discriminating policies against Chinese firms in response to the United States House of Representatives backing a bill that could block Chinese firms from U.S. securities market.
In today's world, where the capital market is highly globalized, the right way to solve problems is to enhance dialogue and cooperation among relevant parties in a candid manner on issues such as strengthening cross-border regulatory cooperation and protecting the legitimate rights and interests of investors. We firmly oppose politicizing securities regulations. We hope the U.S. side can provide a fair, just, and non-discriminatory environment for foreign companies to invest and operate in the U.S., instead of trying to set up various barriers.
The bill, which easily passed the Senate earlier this year, will now move on to U.S. President Donald Trump, who is widely expected to make it law. The Holding Foreign Companies Accountable Act requires non-American publicly traded firms to submit to annual audits by a U.S. regulatory board. Failure to comply 3 years in a row would result in automatic delisting from American stock exchanges. However, the USA claims that the bill is not anti-China and is not designed to prohibit the trading of Chinese companies.
This common-sense bill does nothing more than ensure a level playing field by requiring foreign issuers to play by the same rules as everyone else.
The Senate passed the bill after China's Luckin Coffee revealed it had overinflated 2019 sales by some $300 million. That revelation crashed Luckin's stock price in the U.S., and the company was booted from the NASDAQ exchange over the summer. The lawmakers' support for the regulation showed the strong bipartisan agreement in cracking down on U.S.-listed Chinese firms. Analysts say if the bill becomes law, Chinese companies listed in the U.S. will face enhanced scrutiny by U.S. authorities and will be forced to consider alternative options, such as listing in Hong Kong or elsewhere. Several U.S.-listed Chinese firms, including Alibaba and KFC China operator Yum China, have recently carried out secondary listings in Hong Kong. Zheng Chunying, CGTN.